Welcome to the Digital Assets and the New Architectures of Wealth. My name is Andrea, Associate Director from Multipolitan. My background consists of management consultant from Deloitte and Adaptivate and chair of People and Skills Committee in Swiss Chamber of Commerce in Singapore. Currently, I'm looking after the North Asia for Multipolitan, and so today I will be your host. We're here because Multipolitan has just launched something I'm genuinely very, very excited. The Crypto-Friendly Cities Index 2026 is a global ranking of cities based on how easy it is actually to use, to invest in, and to build around crypto. Not in theory, but in real practice. So for this report, we have evaluated 54 cities across 4 dimensions, including regulations, tax, digital infrastructure, and the real-world adoption. And today we are very pleased to have gathered some of the leading voices in the digital asset space, and they all contributed their perspective to this report. And over the next hour, I hope you will leave with a clear and more honest pictures of where digital assets actually stands today, and what that means for how you think about wealth. So let's get started without further delay. Please join me in welcoming today's panelists with a little bit of their self-introduction. So very first, let's welcome Abu Bakr Majahid, AVP Digital Assets and Security from Rock Bank.
My name is Abu Bakr. Thank you, Metropolitan team, for having me on this panel. So I'm currently serve as the AVP for Digital Assets and Cybersecurity at Rock Bank in the UAE. And as of my background, like over the past decade, I've worked across blockchain, fintech payments, and digital asset infrastructure, helping build and scale products from ranging from crypto payment solution and digital asset platform to bank focused blockchain initiatives. And I'm very happy and excited to be on the panel today. And today my focus is on helping bridge the traditional financial services with the emerging digital asset ecosystem, particularly in areas such as regulated payment token, digital asset trading, and tokenization, obviously, and the frameworks that will be requiring for the institution adoptions. Thank you.
Next, let's welcome Bernard Janowski. He's a Senior Director from Ripple.
My name is Bernard. I spent the last 8 years working at Ripple, which is one of the leading companies for enterprise blockchain solutions. So basically anything that has to do with creating, storing, moving, and exchanging digital assets. I spent the first part of my career in large investment banks in the transaction banking area. So I worked at JP Morgan and HSBC across various functions in sales and product management around cross-border payment space. And then I brought this experience to Ripple to basically help combine the knowledge around cross-border payment space and also how blockchain and digital assets can solve these issues. So looking forward to a very constructive and productive exchange of views today.
Next, let's welcome Elliot Andrews. He's a Chief Executive Officer from Aspen Digital.
As Andrew said, Elliot Andrews, CEO of Aspen Digital. We launched out of Hong Kong in 2021, and we're a private wealth platform, originally purely in digital assets, helping high net worth and family offices gain exposure and build portfolios in the space. That's everything from trading and custody to asset management through hedge funds and venture capital, and also providing access to direct deals as well. In 2024, we moved the business to Abu Dhabi. We're fully licensed and regulated here. We provide services across all of those different components under a regulated infrastructure, which is ADGM. We have about 300 clients, predominantly out of Asia. And as the business has evolved and the market's evolved, we do a lot in the tokenization space. And then we also have brought in our asset classes as well. So we do a lot in the pre-IPO space across different sectors, AI, defense, space. And so it's turning into a full allocation stack, but the underlying rails are stablecoins. So you can subscribe to everything in stablecoins.
Next, let's welcome Christopher Forbes. He's the head of Asia and Middle East from CMC Markets.
Hi there. Thank you for having me as well. Maybe not quite as illustrious as some of my peers, but I run Asia and the Middle East, which is sort of Japan, Singapore, Indonesia, Vietnam, Malaysia, and then Dubai for us. It's a 37-year-old business. We're listed on the FTSE. We sort of founded or started as a CFD business and have morphed into a sort of multi-asset platform. And we power some of the biggest names in the world, like Revolut, for example, ANZ Bank, etc. So we have a B2B business, a B2C business, and then a B2B2C business, in which I think is probably our strongest facet. Specifically on the crypto space, we bought a crypto firm in the UK called StrikeX, which has been a good asset for us about 3 or 4 years ago. We offer obviously cryptos in terms of physical cryptos through partners, through Paxos, as well as CFD cryptos where you can have embedded leverage. But I think most importantly, the stablecoin, you can on-ramp and therefore fund your trading accounts with us in crypto. I think that's probably the most important aspect of what we do, because there's still not many use cases for crypto, and certainly funding your trading account we've been a big beneficiary of that. It's effectively a borderless, de-dollarized version of funding, and so for us, we look at it as a payment rail, but also as a tradable asset class.
But Coco would like us to call him Coco. So let's welcome Coco Wang. He's a Chief Growth Officer from Chintai.
So I am the Chief Growth Officer for Chintai. Chintai is a Singapore-based regulated real asset tokenization company. We have two licenses here. One is a CMS license, allowing us to tokenize a financial product. The other license we have is a recognized market operator that allows us to run a digital asset exchange in Singapore. So Chintai, it's a growth stage company. We are about five years old now, and we have secured our license about 4 years, headquarters in Singapore. The team is scattered in Europe as well as in America. So I am in charge of business development, ecosystem partnership, and a bit of a marketing. My background came from private wealth, crypto, security token at this point, and my past life was in advertising and marketing, so it's a little bit different. So thank you for having me.
Last but not least, let's welcome Nearby Honda. He's my colleague and also the co-founder of CEO in Multipolitan.
I'm Nearby Honda. I'm the co-founder of Multipolitan. Growing up, I never liked the word third culture kid, so I wanted to replace that with Multipolitan. We're in the business of geography. We're building one login to move or travel around the world. My co-founder is a gentleman. His name is Lee John Smith. He built this company called Paydi in Japan, which was acquired by PayPal for $2.7 billion. So he's a product guy. I sit more on the organization side, building teams and opening new offices. So that's a little bit about myself, Andrea. Thank you.
So now after hearing all our panelists, I think it's going to be a very interesting discussion because we have a background about tokenization. We hear many times investor sentiments, etc., and infrastructure. But before we dive in a little bit deeper, I would like to start with a very big question: is where the world does it actually land? And for such questions, of course, it really suitable for my visionary colleague and Nearby. So Nearby, so please help us, right? So if in the fast forward 10 years, like in your view, which cities or regions do you believe it will merge as the dominant centers of the digital asset economy? And what characteristics will have enabled them to succeed? Please help us understand.
I believe the world that we're walking in, geography in general is becoming the ultimate hedge, when it comes to investments, when it comes to allocation. And I think that's going to be similar for the digital asset ecosystem as well. I don't think it would be fair to pick one city that's going to be a winner, but I do believe there are going to be multiple functional peers within the digital asset ecosystem who will coexist. Just like the capital markets, for example, the GDP of New York Metro is higher than that of Canada, and that's primarily because of the stock exchange. So, it's a great place for capital markets. Similarly, if you look at London, London is a place for foreign exchange. Similarly, if you look at Zurich or Singapore, this is a place for custodizing wealth or wealth preservation or banking. And I think we're going to see something similar within the digital asset ecosystem where you're going to have multiple winners. For example, Dubai could be a place which is reducing friction for entrepreneurs to come and build. Dubai could be a place where digital asset entrepreneurs are domiciled because it's fiscally very intelligent and conducive. Whereas Singapore could be a place which is leading from the front when it comes to stablecoin framework. And they've done that issuing a framework around G10 currencies. Whereas Zurich could be a place where digital assets are being custodized, right? So we've seen that with Seba Bank and we've seen that with Signum. So I feel we're going to have multiple winners. And there is an opportunity for different cities, which are forward thinking, to come in and dominate a particular category, whether that's infrastructure, whether that's capital markets, whether that's custodizing, whether that's tokenization. And as the crypto report suggests, we're definitely seeing a lot of action within the digital asset space moving east. And that's primarily because a lot of the governments here are investing in regulatory sandboxes for businesses to come in and experiment and build. So, long story short, I feel there are going to be multiple winners. Places like Dubai, Abu Dhabi, Singapore, New York City, they will all remain relevant, but they will have their own specialization within the digital asset ecosystem, Andrea.
As you can already imagine, the diversity of content and the different perspective that you can find in the report, and also in the future, it'll be very, very dynamic and they keep on moving, just like the current world, but it's just more digitalized in this way. So I think now with the near-based opening, now let's move on a little bit deeper to different sector. To start with, today I hear a lot of speakers already mention about tokenization. So I would like to start with this, the highlighting attention. So we know this asset class arguably generating the most institutional excitement now, the tokenization. And I know just in this January, Chintai announced a 28 billion partnership to tokenize the natural assets across Indonesia's Maluku archipelago. That's big news, Coco. So that's why I would like to ask you, very curious. Tokenization has long been described as a future of finance. And what does it happen in the next 5 years for tokenization to move from niche adoptions to mainstream infrastructure? And please tell us from your experience for your key wins and challenges that you foresee.
Yes, Maluku was a big win for us, but it's a protected 5 to 10 years project because it's a huge project with the Indonesian government. So your question has 3 parts. The first part to answer it's the future of finance, tokenization. It's already embedded as part of the capital market. So we are already in the finance world, and all of my friends here today, we are already in this space. So I wouldn't say it's the future of finance. I would say it's shaping the future of finance alongside with traditional finance. So I guess that would be my point of view. In terms of it being a rather smaller or niche asset class, it is small in the larger scheme of thing of the world capital market. But as of today, I mean, I did a quick check. The distributed asset value for real world assets is about 32 billion already. It's not a lot, but I've been doing this for almost 5 years. It seems a lot to me, right? So it shows a trajectory of growth. And also in terms of asset holders, they are largely institutional investor at this point, has grown to about almost 917,000 holders, which in the past, I'm just looking at 300,000, then you increase to 400,000 and all of that. So I guess that is also driven by a few things. It's about adoption of regulated tokenized assets. It's also about how the tokenized world has also performed relatively well as compared to other DeFi product. Just to give you an idea, as of just last year, RWA as a DeFi category has already surpassed the DEX, which is decentralized exchanges, in terms of total value locked, which means to say people are holding more on real world asset and not so much on the stable and all of that. This is also driven by the movement of like treasury bills is being tokenized a lot more, and also larger player, example BlackRock and Franklin Templeton, that it's already pushing for tokenization, especially with their money market funds. So I guess that sort of support the fact that it's growing and traditional finance that also help to drive this. And this is also supported by, I would say, the infrastructure and the readiness. People like Ripple here, right? They are already sorting out all the institutional grade infrastructure, and also to highlight that Chintai also have our own white labeling solution for tokenization. We run on slightly different protocol, but what we do is we also offer an opportunity for businesses to come into a tokenized asset world by using our SaaS model, right? So they subscribe and they can use it and can brand it. So there's also one thing that we do as well as part of another business stream. So just going back to that, you also asked about the next 5 years. I mean, if I have a crystal ball here, I'll probably will retire in one of the top three, city in
That's what people
in
dial in.
yes.
I want to get some sticker from you.
This is personal insights and research I've done. I felt like most importantly is not where it's heading. The big claim would be tokenized infrastructure or tokenized infrastructure would be the operating system for capital market and the financial world. As in, it's going to largely because it's secured, if it's regulated, and it has a good audit trail in terms of security reporting and built-in compliance as well. I think that already in the works. DTCC is going to launch something relatively big, which is a post-settlement platform sometime in October. So I see that. I felt this is also supported by progressive regulator. I'm based in Singapore, licensed here, so MAS has been very supportive of promoting regulated digital assets. And I felt other jurisdiction in Hong Kong, in UAE, DIFC, VARA, ADGM is promoting that. Some of our friends is from there, and also Hong Kong as well. So I felt this would be one big thing that would support the adoption of tokenization and real world asset. There's no buy sell tips here, but you need to get in.
Yeah, well, so much effort, right? For 5 years, and it comes to 32 billion. But imagine more room to grow. Yeah, but indeed,
Yes.
just like Coco says, right? So but there's an infrastructure that's working on. But the infrastructure only matters if investors are really show up. The money has to come in. So that really comes to my curiosity for my next speaker, which is Elio. As things digital has to sit the sharp ends of this, right? So you work directly with some of the most sophisticated private wealth clients in the region, including family offices and high and wealth individuals. So for you, as sitting in the front seats to see how the mindset has been changing, I'm curious, how has sentiment towards digital assets evolved over the past 3 years? And what are sophisticated investors focusing on today?
So when we launched the platform in 2021, crypto had a lot of friction points, which is why we built the platform, right? You needed to find a way to on-ramp, then you needed to find a way to buy the assets, store the assets, and yield on the assets. And so there were kind of three core ways that we provided at the time to build a portfolio in the space. Is you could buy the assets directly, you can invest in a fund manager, and that could be a hedge fund or a venture capital fund, or you can invest in sort of private market deals directly. And so we provided access to all of those. And then you sort of fast forward to 2023, and the big inflection point to that was the ETF launch, right? BlackRock's Bitcoin ETF is the fastest growing ETF of all time. And that meant you could just buy the ETF with your fiat money in Interactive Brokers or CMC or whatever. And so that made it a lot easier for people to access. And obviously the growth of that has been hugely successful. And so that made Bitcoin very easy to access, and it was what you were going to do with the altcoin market. And obviously there's thousands of different coins that you can potentially invest in. And so that was generally done through managers. Now, what's happened since then is obviously the market has been difficult, I would say, over the last 3 years, particularly in the altcoin space. And I think what we're seeing now is a big retraction from building a very diversified portfolio across all the different altcoins and much more consolidation around major tokens, Bitcoin specifically. And obviously, it's very market dependent. And at the same time, and particularly over the last 12 months, you've had an equity market that has dramatically outperformed what crypto has done. And so you're seeing a lot of crypto platforms at the moment, and Coinbase had some big announcements last night, for example, where these worlds between traditional and crypto are getting very blurred, right? You've got all these assets coming on chain, whether it's equities, gold, money market. And so I think just being a purely crypto allocation is pretty difficult now. I think people have their Bitcoin, they buy their Bitcoin, and that's a long-term hold, and then everything else is kind of up for grabs at the moment. One of the best performing products in terms of appetite that we've got is Bitcoin Yield. So we have a fund with Coinbase, and we have another one with Bitwise, where one thing you can't do with Bitcoin is it's not a yield generating asset, and so you need to do something with it to make it productive. And so there's managers out there who will take your Bitcoin, they'll do some trading around it. There's various strategies, whether it's options or cash and carry trades or credit, to give you a return in Bitcoin terms. And that's one thing you can't do through the ETF. Currently, there isn't a product to support that. And so that's been hugely popular because generally people who buy Bitcoin have a medium to long-term view on it. They're not sort of looking to trade in and out. And so you can get anywhere from sort of 4 to 8% return in Bitcoin terms. And that seems to be a very, very popular product because people are generally just holding that. Outside of that, look, just given where the market's at and what's happening in AI, I think you're seeing a lot of high net worth investors and family offices pivot a lot of their kind of alt portfolio into those kind of names. And this is something that we've been more and more active on, whether it's Anthropic, OpenAI, names like Prometheus, which is Jeff Bezos's new deal. And so a lot of these opportunities are where a lot of the capital is flowing. I think now where we're at, and touch wood, we're somewhere near the bottom for crypto. Obviously, we hit an all-time high in September last year, and we're trading around 65 at the moment. We're seeing a lot of investors come back and starting to slowly deploy capital into it. I think it's a bit of a contrarian trade at the moment, but often being in that sort of situation and being contrarian is where you can make money. AI is obviously at sort of incredible valuations, stock market's all-time highs, and Bitcoin is looking like a pretty good buy for people now. And so people are definitely coming back to us. I think in terms of what they're buying, it's very, very highly concentrated around Bitcoin. And then there's a few assets that have got some product market fit. Hyperliquid's obviously been very popular. I think they hit all-time high today, but generally across the altcoin market, it's been pretty painful. So I think you're seeing a lot of the capital into crypto flow into a very select group of assets.
Yeah, so as he said, so now there's a lot of people from ETF also something more like a more different product like a Bitcoin Yield, etc. But also a lot of people that focus on the real case like transactions, like so this has come to the next really big touch point, right? So when it comes to payment transactions, as today we know cross-border transactions can still take days. And pass through the multiple correspondent banks and cost more than it should. And in this case, blockchain promised to fix that exactly. And we have been saying that for years, right? So how does that actually go? So that leads my question to Bernard. You have spent better part of the decades in Ripple working with banks across Asia Pacific to make this promise real. Here's my question. Cross-border payments remains one of the largest inefficiencies in finance, unfortunately. What are the key barriers preventing blockchain-based settlements from becoming the global standard today?
I would start by saying, look, even within blockchain, there is no standard right now. So it's hard for blockchain to become a global standard. Even within that data set, you don't have one standard. But going back to what Nirbhay said when he kicked off his part about the global cities, I would say there are different solutions and mechanisms, and they will coexist, just like various global cities will play different roles in this ecosystem. There will be different solutions within the broader digital asset space that coexist. And I can throw a few names or terms here. So on one side, you have stablecoins, right? Becoming quite popular for some use cases. On the other side, large banks are increasingly starting to push the so-called tokenized deposit solutions that they develop. For now, these are so-called walled gardens, so you can only use that tokenized deposit within banks' ecosystem. A couple of years ago, a hot topic were the so-called CBDCs, so central bank digital currencies. And also in the early days, people were getting excited about potentially, Bitcoin or some other assets being that payment mechanism. So even, within that set, you have 4 different ways or potential standards, right, for making payments. So before I go to what are the barriers, I wanted to flash that actually, payments, especially with the use of stablecoins, are actually growing, and there are multiple use cases where I see quite a lot of uptake in adoption. One such use case would be emerging markets, right? So think about Africa, think about Latin America, or any other market really where access to dollar liquidity is actually in many ways restricted. Stablecoins particularly solve that problem and allow buyers, so for example, importers into those markets, to pay to the exporters that are located in this part of the world, in Asia, Southeast Asia, China, through Hong Kong, to get paid faster than it would be, let's say, through rails such as SWIFT. So these stable coins actually solve a real problem of being paid faster. The other use case is, I think, what Chris has mentioned. Funding, for example, trading account for real world assets, not necessarily crypto assets, like funding such trading account in a cross-border manner. It's generally going to be faster than sending SWIFT. But of course, in many places around the world, especially most of us sit in developed markets, we don't see that many pain points with cross-border payments as people, let's say, in more emerging markets. So I think that is also one of the reasons why in our markets we haven't seen that much more adoption. Broadly speaking, moving on to barriers that I'm seeing that prevent this from scaling further, there are a few. First is regulatory in nature. So again, in many markets that have been mentioned today, Singapore, UAE, we have very much forward-looking regulators. US, Europe, also getting there with the Genius Act with MiCA. So there is this regulatory framework for large institutions to start adopting digital assets. But in many other markets, especially those that I mentioned, emerging markets, this is still not the case. So yeah, that is definitely one barrier. The other one is liquidity fragmentation. So if you think about it, still today, if you're making a payment cross-border, very often the beneficiary will want to receive the money in their own national currency, not necessarily in dollar, right? So if you're using stablecoin for that purpose, you first need to trade your own national currency into a stablecoin and then trade that stablecoin back to the beneficiary currency. So that lack of liquidity in many markets, including in Southeast Asia, are one other problem. I mean, a lot of people call this flow the so-called stablecoin sandwich and argue that this is much faster. Yes, but that shallow liquidity often results in not favorable, let's say, exchange rate into those emerging market currencies. And then there is the issue, the third barrier that I would say is institutional adoption, right? So in order for blockchain to be used for cross-border payments, the large financial institutions, particularly banks, to answer your question, Andrea, have to adopt it, right? And banks, especially until late last year, have been extremely cautious about adopting digital assets, even stablecoins, for cross-border payments. That situation has changed with the Genius Act in the US. Once US starts moving, the rest of the world starts moving. Most of the cross-border payments today are still done through US dollar, right? So that allowed the stable dollar, the US dollar pegged stable coins to be at least considered as a mechanism by the bank. So I think that we're going to see quite a bit of change in the next 12 to 24 months. I can tell you that large banks in this region are now much more bullish on adopting stable coins in their flows for payments. Of course, there's always chicken and egg problem. They want to see the demand from their user base. Usually it's from large corporate customers. And if they see more of that demand, they will build these solutions faster. But again, for many of us, especially making payment to another developed economy, into the US, into Europe, there are already solutions using Swift, using some of the more traditional fintechs. And these solutions actually work quite fine. I'm sure many of us tried TransferWise or Revolut to make that payment. And these fintechs actually provide very good service. So I would stop here and happy to exchange views with my colleagues a bit later. Thank you.
Particularly, it's nice to see, besides the regulations, the very difference between emerging market and mature market, right, and liquidity issues. But also happy to see, it seems that there's a stronger demand for the institution to adapt for the adoptions of using a blockchain. And speaking of this, I would like to go inside the bank because we're talking about market previously. So we know for all the progress we have discussed so earlier, the real taste of where digital assets has arrived is whether the traditional banks are building products around them and start using it, not just watching from the outside. So for this, I know Rock Bank has done an excellent example. So for Abu Bakr, I know you have been the person who actually making it happen for your bank. So I would like to know, given your experience in one of the UAE's leading financial institutions, I'd love to know, as institutions increasingly embrace digital assets like yours, what do you see as the biggest barriers to widespread adoption today? Is it technology? Is it regulations? Or it's simply shifted in the mindset? And more broadly, I'm also curious, are we witness the institutionalization of crypto or a gradual cryptonizations of traditional finance?
When I think about the institution adoption of digital assets, so I often look at how the conversation has evolved over time. So, for example, if we go back 5 or 6 years ago, when crypto was brought up in boardrooms, the actually question was usually, is this real or is it just speculation? Is it just a hype? And there was a lot of skepticism that many institutions viewing digital asset as something that will be operating outside of the traditional financial systems. And the focus was on volatility, headlines, and uncertainty, it was there. Then a few years later, if we see, the conversation has changed. And the question was no longer, is it real? But the question became that, is it safe to adopt? And as Bernard was mentioning, so my answer will be supporting that also. So the question became is it safe to adopt? And institutions start paying attention that they begin exploring use cases, running pilots, and speaking with technology provider. But the focus was still on risk, because for as banks and financial institutions, we have a lot of regulation from central bank and from different regulatory bodies, and we have to manage that risk. So the focus was, how do we secure the assets and how do we comply with the regulations if we need to adopt that, and how do we protect customers, because we are also coming under the customer protection framework. So, and all of the above, how do we manage the operational risk for that? And if I see today, fast forward to the time, today I believe we are entering in the third phase, where the question is no longer, is it real? Is it it's no longer even, is it safe? The question today is, how do we participate, right? And that shift is incredibly important, because it tells us that the industry has moved beyond the curiosity and moved beyond the experimentation, and that we are now talking about the implementation, and that's what the Rack Bank has already done, right? And that is why when people ask whether like the biggest barrier is technology, regulation, or the mindset, I actually think the answer is a confidence. Like technology has matured significantly, right? Today we have the institutional grade custody solutions, we have regulated exchanges, we have tokenization platform, we have blockchain analytics tool, and we have stronger cybersecurity frameworks also. We have infrastructure that simply did not exist a few years ago, right? It was there, but it was not mature, I would say. And regulation is also evolving rapidly, right? If we look at the UAE, for example, we have seen regulators take a very proactive approach. Rather than waiting on the sidelines, they have engaged with the industry, created frameworks, regulations, and provided greater clarity for institutions like us to look and participate responsibly. So, of course, regulation will continue to evolve, but I would say, like, but we are no longer in a world where institutions are waiting for a regulation to begin or thinking about the digital asset. It's not the case, at least in UAE, right? And many are already building strategies today, and many institutions are doing that, which bring us back to the confidence of like financial institutions are not designed to move fast. They are designed to manage trust, right? As a bank, we need to manage the trust of our customer, regulations, and that's all. And that all is there. So when I like, for example, when a customer deposit money into a bank, they expect that money to be protected, right? When an institution launch a new product, it must be secure, compliant, resilient, and reliable from day one, right? So the real challenge isn't whether the technology works or not. I believe the real challenge is helping institutions gain the confidence that they can adopt these new technologies while maintaining the standards of trust, risk that the customer expect from them, right? And this is where I think the industry is entering a very interesting phase, to be honest. People often frame that the future as a choice between traditional finance and crypto, but I don't think that's what is happening at all. The more interesting story is that both worlds are beginning to converge, right? On one side, the digital asset industry is becoming more institutional, and we are seeing stronger governance, better risk management, greater transparency, and improved security standards also. So I will say like and to be honest, on the other side, if we see that traditional finance is also increasingly embracing concepts, right, like that originated from digital asset ecosystem. Like as a rock bank, we have the in principle approvals from central bank for our own stablecoin, right? We launch our crypto brokerage offering for our retail banking customer, so you can buy, sell crypto, swap crypto within the banking application. So we are seeing the growing interest in and like in the crypto trading and all. But like more interestingly, like as in if I talk about the region itself and the industry itself, we are seeing like growing interest in the tokenization space specifically, and we are seeing interest in digital asset custody. We are seeing interest in blockchain based settlement, as Bernard mentioned, like so we are seeing interest in regulated payment tokens and how they can improve um, efficiency in areas like such as cross-border payments, settlements, because those are the main you can say pain points for the traditional finance industry, like the T settlements time, T plus one, T plus two. So I don't believe like we are witnessing the like institutionalization of crypto. I believe we are witnessing the modernization of financial infrastructure in many ways. Like, and it reminds me of, like you can say, it reminds me of the evolution of the internet. Like years ago, people were speaking about internet companies and traditional companies that they were like as if they were separate categories. Today, the distinction doesn't really exist, right? So every company is using the internet in the same way because it becomes a part of the underlying infrastructure. So I believe something similar may happen with digital asset and blockchain technology. So and the people will not be asking whether an asset is tokenized or not. They will simply expect services that are faster, more transparent, more accessible, more efficient, and the underlying technology will matter less than the outcome it will be delivering.
Yeah, to you, I sound like it's more like about trust building an ecosystem so that everybody's move along from the
Yeah,
user
exactly.
things from all together. Now we talk about different perspective. I would like to jump to something very, very unique haven't touched so far, which is the trading room. All right, so here we actually moved to Chris. So Chris, your firm CMC Markets recently announced the consolidations of its Singapore entities ahead of a major multi-assets. And I know you have witnessed capital markets transform more than once across your career, right? So having for you, from a very front seat role to see the evolution from global capital markets as an entities market variant, as you look at the digital assets ecosystem today, what parallels do you see with the previous transformation in financial market, and what lessons should investors be paying attention to?
Started my career similar to most of the guys here. I was in Goldman, then Morgan in the UK trading, so very traditional finance. I then moved into a hedge fund and then into CMC. So it's always been sort of traditional finance. I think what's interesting is I sort of agree and disagree with some of the comments out there. I mean, for me, quite frankly, the tokenization has been around forever. A CFD is effectively a token. What is a token? A token is effectively digitalizing a real world asset. Well, banks have called it a swap forever, and that's on the institutional side. And the retail side has called it a CFD or spread bet. It's been around forever. It's not new. Tokenization, for all intents and purposes, like everything, is just a settlement mechanism. How do you settle a trade? How do you settle a payment? How do you settle an investment? It's just a settlement wrapper. And in this Web 3.0 AI, let's call it space world, which is effectively the fourth evolution of the internet, I agree. We're calling it a digital asset or a token, but it's a CFD, it's a swap. It's exactly the same thing. And so what's interesting is we actually tokenized SpaceX 3 years ago. We were selling it to customers. Everyone's jumped on the bandwagon now, but it's 3-4 year old technology in the retail space, in CFD space. I do agree with the payment rails, but I disagree with the reason that the payment rails are excellent, and I think that's really the future of tokenization. And I think that part of the reason the payment rails work, especially in Asia and especially in sort of parts of South America, it's not because of technology, it's because of the rules of government. If you go to China, Vietnam, Thailand, India, they have restricted currencies. You physically can't take the money out, or you can take up to a certain amount. It's not technology. Their technology is a mile ahead of the Western world. It's regulation. So I think there's a clear distinction. I just want this audience to understand it's not this superior technology. It's just regulation that China and India and Thailand have restricted currencies. So a lot of those payment rails we see, even today, are to facilitate restricted currency transactions. That's why you're seeing mass adoption in the countries that you're seeing in. So in Dubai, in China, in Vietnam, Thailand, that is the real use case. And that's why someone like CMC is a huge beneficiary of this use case, because one, we are in the payments business. Two, we are on-ramping via crypto onto our trading platforms. Or you can invest into things like tokens with it, which we offer as well. So we offer CFDs, cash equities, etc., and tokens. So we bought StrikeX for exactly this purpose 3 to 4 years ago, that we saw the vision. I agree with most of this panel here that tokens have been around forever. Someone mentioned horse racing earlier. People have been fractionalizing horse legs, as many of you know, and especially in Australia, forever. It's not new technology. They just call it horse legs. I own 1/8 of a horse leg, and you tokenize it, and it's effectively a settlement vehicle for that. So I agree. Tokens are here to stay. I don't necessarily share the same vision that it's a lot of these tokens and some of the Bitcoins and Ethereums of the world of the future. I still think it's stable coins. I think the big distinction between a lot of these tokens and stable coins is the de-dollarization. And I think that's quite a strategic and important distinction between stablecoins and some of the other tokens out there. And then you've got this third or fourth wave of these tokens now, because if you try and use Anthropic or any of these guys, you get access to their systems by buying tokens. And so you're seeing the next evolution of what a token is and isn't. So it's very interesting. But anyway, long story short, I don't think it's new. I do think it's important, but I mean, certainly we've had it for a long, long, long time. And I just want to make it really simple. Tokenization, and I think the key thing with tokenization, someone touched upon earlier, how do you still buy Tesla tokens or Tesla stock? You still have to go to a counterparty to trade that stock. And then where do you hold it? Who does the corporate action? Who does the dividends? Who does the custody? Who does your voting? It's not quite clear yet. So you still really have to hold it on a platform. And if you're going to hold it on a platform, you need to tokenize it. I think these are the more interesting conversations to have at a retail and institutional level.
I really need your energy for the next sections. Yeah, so far we have been talking about building blocks for new architectures. We talk about tokenizations and the viewpoints of this. We talk about investor sentiments, the payment rails, and institution adoptions, and the lesson to learn from the market issue, which is it repeated itself, nothing really new, just change a different format. And then really leads out to our next questions. So next questions, the session's very last one is called the rapid fire questions. So we have roughly a few moments. And I would like to understand you guys the statement, just like what Chris demonstrated earlier, right? What do you believe? What do you think? So in this case, here's the rules, right? So all of you guys, I'll have a list of questions. And when it comes to you, I'll randomly call out your name. If you want the answers, you can also do that. Please don't give me, let's say, political answers and no consulting answers like depends whatsoever. Tell me yes or no, A or B, believe it or don't believe it, or its options, pick one. If you want to justify, give me no more than 2 sentences if you need to. But otherwise, I think the sense is really getting to a little bit of different conflicts. So don't worry about it. It's a fun game. Are you ready? All right.
Yeah.
Okay. So your name may be called at any time. So please don't mute. Yeah. Okay. All right. So my very first question. Bitcoin, store the value like gold, or just the next speculations assets with better PR? I think this one, Coco, what do you think?
No and yes.
No, pick one.
Well, because you can combine Bitcoin and gold now. So there's a yes and a no.
All right. Okay. Bernard, what do you think?
Store of value. Yes, I agree.
Yeah. Okay. Speculations assets. Yeah. All right. Next questions. Will stablecoins eventually make traditional bank accounts feel unnecessary? Ooh. Abu Bunker, what do you think?
They will be complementing eventually, but like it's not like that. They will be replacing it out totally.
All right. Okay. What about Chris? What do you think?
Definitely a no.
All right. Next question. Is
Been
the
around for
crypto?
millennia. It's never changed.
Yeah, it's humanity here that we're talking about. Okay, next questions. Is the crypto industry better or worse for having gone through the FTX collapse? Elliot, what do you think?
Much better.
Much better. Because?
I think it was the peak exuberance and fraud that it wiped out a lot of that and brought in a lot of the regulatory conversations that needed to happen.
Yeah, for now the investors is the confidence, right? Yeah. Coco, what do you think?
Yes, I agree as well with Elliot. I think that also helped in terms of the maturity of a new asset class. Therefore, people is asking a lot more informed question instead of buying altcoin that name from, we don't know what kind of name comes out of it. So
Yeah.
it's a yes.
Third questions. All right. Okay. Yes. Good. All right. Next one. More regulation. Does it protect investors or slow down innovation more than it helps? So about the regulations, maybe we can ask Bernard, what do you think?
Some regulation is needed. Too much regulation is not good.
Chris, what about you?
Sat in a regulated environment my whole life. I think it's a good thing.
Okay, the next one. Banks getting into crypto. Genuine belief or just the fear of being left behind? Banks getting to. What about Coco?
I think it's a FOMO.
Very strong statements. I like. Chris, what do you think?
I think the best example is the Clarity Act. I think if you're pro it, you'd be pushing for it. And I think most of them are pushing against it.
Okay.
Banks make money not trading. They make money collecting CASA, your deposits, and lending them. The Clarity Act goes against everything to do with that. And there's a huge conflict of interest. So I don't think so, no.
Good point. Next one, Singapore, Dubai, or Hong Kong? Which city wins the digital assets race in Asia over the next 5 years? Bernard, what do you think?
That's a tough one. I think it's going to be between Singapore and Dubai. I think Hong Kong has some fixing to do. They have a couple different regulators. Yeah, Dubai was coming very strongly at some point, and Singapore, I think, has recently slowed down, but I'm not sure. I think it's more or less parity now. Yeah.
Okay, sounds good. All right.
I'm going with none of the above, and we'll go with Abu Dhabi.
Abu Dhabi. Absolutely. All right, Abu Dhabi. Okay, the next one. The biggest barrier to crypto adoption today, is it trust, complexity, or regulation? Okay, for this, Abu Bakr, I already know your answer, so it's going to be trust, right?
Yeah. Trust.
All right, no surprises. What about Bernard? What do you think?
I would agree. It's trust on different levels, right? Trust in stablecoins or other assets, trust into providers, because nobody can do anything by themselves. So you need to work with other stakeholders in this ecosystem. So I would say trust.
I'll take a slightly different answer. I think it's fragmentation. Crypto is so fragmented, it's horrible. It's a horrible, horrible asset class. From payments to investments to what rails you use is so complicated unnecessarily and fragmented because it's not owned by anyone or any government. It's owned by companies. And so everyone's got an agenda. So you can send one coin across 10 rails. It's a disaster.
Yeah.
It needs a single scale. To get scale, it needs to be simplified in a major way.
Hope that they come soon. All right, the next one. Would you personally keep more than 20% of your own savings in digital assets right now? 20%. Iliad, I think I will want to ask you.
Of course.
But of course, more than 20% for you? Wow. All right. Abu Bakr, what about you?
Yeah, definitely.
Oh, wow. All the pioneers we have here. I'm
I'm
curious.
interested to see what Chris says.
Yes. Chris, what about you?
I mean, look, I would be a buyer here. I think it's interesting at this price point. I think it's cheap.
Yeah, for this platform. Good recommendation for the audience. All right, the next one. Tokenized real estate or tokenized gold. Which one breaks into the mainstream first? Coco.
Go.
Definitely gold. Yeah.
Yes.
Okay. All right, just for the contrast. Iliad, what do you see?
Gold. I mean, it's got quite a lot of adoption already through Tether.
Yeah.
Real estate, back to Chris's point, it's already pretty easy to fractionalize. You got REITs and other ways as well.
Yeah, that's true. We already have REITs, right? So gold is actually more news. Yeah, more news. Okay, next one. Is it already too late for someone starting in crypto today to make a life-changing returns? Yes or no? Chris, what do you think?
Very easy.
Because the price point today, yeah. Okay. What about Bernard?
I would disagree. I think, especially if you invest in one of the mainstream digital assets, it's a bit late unless, you invest or put money into one of the altcoins, which, it's definitely more risky.
Yeah, I figure you more, consolidated, conservative moves. So there'll be good contrast here. All right, the next one. One word to describe where crypto is right now. Boom, bubble, boring, or breakthrough. How about everyone saying this one? Boom, bubble, boring, or breakthrough? Abu Bakr?
I guess I'll say breakthrough.
Breakthrough? Bernard?
Yeah.
I don't know if any of these words describe the current state. There is a lot of fragmentation, as Chris said. But if I have to choose one, it would probably be breakthrough, but people have been saying it for quite a while.
Iliad, what do you think?
From a price perspective, pretty boring. From a adoption perspective, breakthrough.
Chris, what about you?
I completely agree. I actually think it's quite boring across both. Price has been suppressed, but the technologies, I think the only interesting thing is the agentic payment stuff. I think that's quite interesting. Everything else is fairly commoditized and BAU now.
Coco? Very last.
Breakthrough. I think it's a
Breakthrough.
breakthrough. We
Okay,
haven't
very
seen such
boring and breakthrough.
yes,
Yeah, good
technology for a
conversation.
while that's changing the world, good and bad, but it's
Yeah.
still a breakthrough. Yes.
That's good. All right. Sorry if the conversation was so good we actually overrun. But today we have some crypto move further into a structured finance to real adoption signals. And thanks for the really rich, engaging discussions we have today for everyone. Just to let you know, if you're interested in the conversation, the report is actually definitely also very, very interesting to read. Worth a read. Maybe later there will be a click for you to download for everyone. And thank you for joining, and thank you for all the panelists sharing. I look forward to meeting you again. Until next time.